My name is Wilhelm Mohn. I am Global Head of Active Ownership at Norges Investment Management, the manager of Norway's sovereign wealth fund. We invest all around the world in nearly 9,000 companies. And what I do is really to think about the principles, the long-term principles for that ownership, how it comes to play with companies, how we should vote, and ultimately also how we report on the results of what we do. So that's a very interesting job. And my role is also then, maybe my role isn't so important for the future of corporate governance, but the future of corporate governance is very important for my role, because we really depend on good corporate governance for the work we do to function properly, so that our interests are well looked after as a small minority global investor. There's been a lot, actually, particularly if you think back to the end of the financial crisis and the Great Recession and some of the rules that came out of that, to try and really make sure that boards were more transparent, more accountable to shareholders, that they were made up of the right people. So if you have seen principles, reforms throughout the world on risk, the role of boards in risk management, the role of boards in terms of long-term value creation and strategy, how you relate to your stakeholders, who should sit on the board, diversity, demographics, experience, making sure that the board is robust and can take the right decisions, can challenge, and so on and so forth. And also a broader sense of the board's accountability for sustainability risks to the company, but also outcomes and how you talk to your stakeholders about that. So a lot of change, most notably maybe, or more the thing you can really observe are to do with independence, making sure that the people on the board are not beholden to management of the board or specific interests, and also gender, where you've seen a huge change in the last 10 years from a situation where not many companies at all had, for example, women on the board, to a situation today where many companies do, and in big parts of the market, it's becoming the norm to have around 30-40%. The short answer is we try to take a global approach based on sort of global principles that are coming out of, for example, the OECD guidelines or principles for good corporate governance, and really based on our long-term interests as shareholder. So that's where we're starting from. We're doing that because we believe it's a way to be predictable, it's a way to be transparent, it's an effective way of communicating to a lot of companies, and it's a way to sort of make sure that there is a sort of universal approach to what we do. But then obviously the world isn't the same everywhere. There are some governance practices that are really, really good in existing markets, that even if they're not maybe conforming to standards or general principles, it's a good thing. And then there are some markets where you're further behind and where you'd like to promote gradual change. So in practice we take a more nuanced approach, and we try to seek a gradual sort of evolution in direction of our principles. So that, for example, when we vote, we don't necessarily vote on our long-term position on a thing like independence. We allow for market differentiation, but with the view that over time we get to where we want to be. It's a very exciting time because you're seeing the fruition of a lot of sort of reforms over the last 10 years, and you're also seeing a world that's changing very, very rapidly. It's changing rapidly technologically, it's changing quite rapidly maybe politically or geopolitically. The international institutions are challenged in some parts of the world, so there's a lot for a company, an international company, to negotiate, which is maybe a break from the previous few decades, which was kind of reasonably linear in the sort of direction of travel. You're seeing climate risk coming up, nature risks, a lot of things that were talked about before are really starting to bind. So I think the most important thing is that boards are ready to take on those challenges and have the type of knowledge collectively to manage it well. And for an investor, okay, there are some things you can observe, there is more data, there are things you can do to try and prioritize better how you rise to those risks, but at the same time, it probably requires a very nuanced take on what is an effective board and what's the right culture of the board and so on. So yeah, it's not an easy, probably the next decade will not be easy for corporate governance, but I think it will be even more important that we have good corporate governance, and that things like transparency in particular are there so that it's a real sort of disciplining factor behind it all to ensure that the boards account for their duties. I'm not sure if I would advocate for anything in particular. I think the idea of gradual harmonization, maybe not so much about, well, there's some fundamental principles, responsible business conduct, where you can go to OECD guidelines and you have a sort of clear understanding of what's responsibility and what's responsible conduct. And I think those things can be harmonized more. And making sure that the implementation of all these rules globally are following some sort of at least building block approach, or that they speak to one another, so that you don't end up in a situation where you have sustainability disclosure requirements in one market that are different from a different market and so on. So, for example, on that topic, we've been very strongly behind the ISSB to try and have a building blocks approach that is universal. And I think we'd like to see that on many, many areas, because if you end up in a situation where the burden becomes too heavy on companies and there is too much differentiation and maybe too much prescriptiveness as well, you will probably not end up with outcomes that are in the best interest of the long-term value creation we're seeking, the broader environmental or societal outcomes, or fit to make sure that boards account to shareholders in a transparent and clear and simple way. So I think that will be very important. Maybe not more rules, but more thinking about how rules are effective and how they play together.